Hi, dear. Welcome to your favorite audiobook channel, Wisdom Flicks. Master your trading mindset. Introduction. The real battlefield is the mind. Welcome to master your trading mindset. Think like a market winner. Before we talk about charts, strategies, candlesticks, or indicators, we must talk about the one place where the real battles are won or lost. Your mind? You see, trading isn't just about buying low and selling high. If it were that simple, everyone would be rich. But the truth is, the markets are filled with people who know exactly what to do, but can't do it consistently. Why? Because trading isn't just a game of strategy. It's a game of psychology. Your mind, not the market, is the true battlefield. The game is 80% mindset, 20% mechanics. The majority of traders lose not because they lack information, but because they lack mental discipline. You can have the best trading system, the most expensive indicators, or follow the most successful guru and still fail. Why? Because you hesitate, you panic, you get greedy, you revenge trade, you sabotage yourself. Think of it like this. If strategy is the car, mindset is the fuel. And without the right fuel, even the most advanced car won't take you anywhere. When? The stakes are real. When money is on the line, your mindset determines how well you execute. Not just once, but again and again, in the face of uncertainty, losses, and temptation. And that's exactly why this book exists, to help you build mental strength, emotional control, and laser-sharp focus. Because winning in trading is not about being perfect. It's about being psychologically prepared. The market is ruthless, but not personalist. Be clear. The market doesn't care who you are. It doesn't care about your background, your dreams, or how badly you need to win. The market is neutral, indifferent, absolutely unforgiving to emotional weakness. But here's the good news. If you can master your mind, the market becomes predictably beatable. Not in the sense that you'll always be right, but in the sense that you'll always be in control. Think about that. What would it be like to enter a trade without fear? To let a setup go without chasing it? To take a loss and feel calm? That's the trader you're about to become. And it starts by understanding that your success begins within. Emotional triggers are your real inner mind slit. Let's talk about emotions, the ones you try to ignore, but secretly control your every move in the market. That voice that says, just one more trade to make it back. That anxiety that makes you exit too early on a winning trade. That euphoria that blinds you after a streak of profits. These emotional triggers are subtle, but powerful. They whisper to you in the heat of the moment. And if you're not mentally disciplined, you'll obey them like a puppet. Every great trader learns to master these voices, not by ignoring them, but by becoming aware of them and building emotional resilience. In this book, you'll learn how to recognize your patterns, break destructive cycles, and build new mental habits that serve you, not sabotage you. From chaos to clarity, the mindset shift. Most new traders operate from a place of chaos. They jump from strategy to strategy. They overtrade. They chase every breakout. They fear every dip. But a market winner plays a different game. A market winner trades with purpose, not emotion, accepts losses with maturity, follows their plan with discipline, operates with calm under pressure. This shift doesn't happen overnight. It happens when you commit to developing your inner edge, when you treat mindset not as a soft skill, but as the foundation of everything. The greatest traders in history, Paul Tudor Jones, Mark Douglas, Ray Dalio, all preach the same principle. Your mindset is your edge. Without it, nothing works. With it, even the simplest strategies can succeed. This book is your mental blueprint. Throughout this book, you'll gain access to practical, actionable tools to reshape how you think, react, and behave in the markets. This is not just about motivational talk. This is about retraining your brain for high-performance trading. You'll learn how to overcome fear and greed, how to build emotional discipline, how to develop patience and timing, how to bounce back from losses, how to maintain clarity under stress, how to create a trading identity rooted in mastery, not outcomes, and most importantly, how to become the kind of person who can win consistently. Because in the end, your trading results are a reflection of your psychology. You don't need to predict. You need to prepare, let go of the fantasy that you need to be right every time. The market doesn't reward perfection. It rewards probability with discipline. Your job is not to control the market. It's to control yourself. Once you internalize this, everything changes. You begin to trade with clarity, cut losses early, let profits run. Stay calm and focused. Prate with confidence, not arrogance. The best traders don't force the market. They flow with it because they've mastered the only thing they truly can control, their mindset. Let's begin. You're tired of letting emotions ruin your trades. If you're done with inconsistency, anxiety, and self-doubt, if you're ready to take control of your inner game, then this journey is for you. Because the market doesn't need more emotional gamblers. It needs disciplined decision makers. And with the right mindset, that's exactly who you'll become. So take a deep breath, clear your mind, and get ready to master your trading mindset, because that's how you'll become a market winner. Chapter 1, the trader's inner game. There's a moment every trader faces when the market tests you. Not on your strategy, but on your self-control. It might be after a string of losses, or after a massive win that tempts you to risk it all again. Or maybe it's that moment when the chart is screaming for action, but your gut tells you to wait. These moments aren't about skill. They're about the inner game. And your success in trading will always come down to how well you played this game within yourself. Trading is 90% mental, 10% technicalness. Easy to believe that trading is all about having the best indicators or perfect timing. But here's the truth. Seasoned traders know your mind is the most powerful trading tool you have. Your discipline determines whether you follow your trading plan. Your patience decides if you wait for the right setup. Your emotional control dictates whether you cut your losses or hold a loser too long down. So, while many focus on systems and signals, the elite focus on what's beneath the surface, the habits, thoughts, and emotions that drive every single trading decision. This is the inner game, and it's the part that separates winners from wannabes. Who you are shapes how you trade. Let me ask you something. Do you approach the market with clarity or with chaos? Do you act on plans or on impulse? Because your trading performance is a mirror. It reflects back who you are, your strengths, your weaknesses, your fears, and your habits. If you're undisciplined in life, you'll likely be undisciplined. In trading, if you can't handle discomfort, you'll avoid taking calculated losses. If you chase excitement, you'll overtrade, gambling instead of executing. But here's the good news. You can train yourself to think, feel, and act like a market winner. Not by faking it, but by mastering the inner game. The cycle of emotional trading. Let's break down what usually happens to most traders. They enter a trade with hope, not a plan. The market moves against them. Panic sets in. They freeze or double down. If it turns into a win, they get euphoric. They start feeling invincible and over-leverage the next trade. If it turns into a loss, they get angry. They seek revenge and make irrational trades to get it back. Sound familiar? This cycle of emotional trading is predictable and destructive. It's like being caught in a loop. You can't escape until you do one thing. Take full responsibility for your mindset. Because until you control what's going on inside you, you'll never control what you're doing in the market. Your mind is your arm in the chaos of the market. Your greatest protection isn't a stop loss. It's a strong mind. Strong trading mindset gives you the courage to stick to your edge, the discipline to wait for high probability setups, the wisdom to walk away when you're off balance, Think of your mind like armor. If it's thin and cracked, every little fluctuation in price will break through and trigger you. But if your mental armor is strong, forged through practice, discipline, and reflection, then you become unshakable. And that's the goal. Not to avoid emotion completely, but to learn how to feel emotion without being ruled by it. Identity drives behavior. Every trader has an identity, even if they don't realize it. Some see themselves as risk takers, others as cautious. Some act like gamblers, others like disciplined operators. But here's the key insight. How you see yourself shapes how you trade. If you view yourself as an impulsive trader, guess what? You'll continue to act on impulse. If you believe you're someone who can't stick to a plan, you'll keep violating your system. But if you begin to see yourself as a calculated, patient, and focused trader, you'll start acting that way. So here's your first assignment. Define your trader identity. Not based on your past, but on who you choose to become. Say it out. Loud if you must. I am a disciplined trader. I am patient. I wait for my edge. I manage risk like a professional. I don't chase. I don't panic. I play the long game. This isn't just affirmation. It's rewiring your brain. Because when your identity shifts, so does your behavior. Awareness is the first step to mastery. You can't change what you don't notice. So before you can master the inner game, you must learn to observe your own patterns. Start asking yourself, when do I feel most emotional while trading? What thoughts come up after a win, after a loss? Do I have recurring impulses, like checking trades obsessively or revenge trading? Track your mental triggers. Write them down. Study them like a chart, because every time you become aware of a negative habit, you gain the power to change it. And every time you act with awareness, not emotion, you become a stronger trader. The calm mind sees clearly. The market, the calm mind, always wins. When you're calm, you wait for your setup. You respect your stop loss. You don't force trades out of boredom or fear. You respond instead of react. And the beauty is, calmness is a skill. It can be trained through breath control during stressful trades, meditation to build emotional awareness, pre-market routines to ground yourself before entering the battlefield. Just like a soldier wouldn't go to war without preparation, a trader shouldn't enter the market without mental readiness. That's what this book will teach you too. Step into the arena with composure and confidence. Final thoughts. You are the strategy lens. End this chapter with one powerful truth. You are the strategy lens. Yes, you'll learn about risk management, setups, and systems in other places. But none of them will work unless you do. Your mindset, your thoughts, your emotions, your discipline is the edge. If you master this inner game, the rest becomes easier. If you ignore it, even the best system will fail in your hands. So, as you move forward in this journey, keep this front and center. The market is unpredictable, but you, with the right mindset, can become unshakable. And that is how you begin thinking like a market winner. Chapter 2. Why most traders fail? Let's start with a hard truth. Most traders fail. Not some, not half, not even most, by a small margin. We're talking over 90% of traders who enter the markets will lose money consistently and eventually quit. Why is that? Is it because trading is too hard? Is it because the market is rigged? No. Most traders fail because they never learn how to win the inner game. They come in with big dreams and small discipline. They chase profits and ignore process, fatigue, blame the market instead of owning their mindset in this chapter. We're going to break down the real reasons traders fail so you can recognize the traps before they catch you. Reason number 1, emotional decision-making gimmick. You're in a trade. The market starts moving against you. You feel that twist in your stomach, that rush of adrenaline, that voice in your head whispering, just wait, it'll turn around. So you hold, you hope, you hesitate. And then Suddenly, boom, another loss, another hit to your confidence. This is where most traders lose, not on their charts, but in their hearts. Emotions are powerful. And when they run the show, logic takes a back seat. Fear, greed, revenge, overconfidence. These emotions don't just influence your decisions, they hijack them. Successful traders aren't emotionless robots, but they've trained themselves to recognize emotional impulses and not obey them. Reason number 2, no clear trading plan. Many traders approach the market like gamblers. They enter trades based on feelings, social media hype, or random indicators. There's no system, no structure, no strategy. If you ask them, why did you enter this trade? They might say, it looked like it was going to go up. That's not a plan, that's a hope. And hope is not a trading strategy. A trading plan tells you when to enter, when to exit, how much to risk, what to do when things go wrong. Without a plan, you're not trading, you're guessing. Guessing leads to inconsistency, anxiety, and failure. Reason number 3, strategy, hopping and shining. Object syndrome. Let's be honest, we live in a world of information overload. There's always a new indicator, a new guru, a new secret method. And so, what do most traders do? They jump from one strategy to another. One day, it's price action. The next is Fibonacci retracements. Then it's crypto signals, Telegram. They never give anyone approach to time, focus, or discipline it takes to truly master. This constant switching keeps them in a loop of false starts. They're always learning, but never growing. Always busy, but never consistent. To succeed, you must pick a strategy and give it consistent, focused execution. Mastery doesn't come from trying everything. It comes from sticking with one thing until it works. Reason number 4, poor risk management. Here's a universal truth in trading. If you don't respect risk, it's the market will destroy you. Most traders fail because they treat trading like a slot machine. They go inland on one trade. They risk more than they can emotionally handle. They double down after losses, and then one bad trade wipes out weeks or months of progress. Risk management isn't just about protecting your capital. It's about protecting your mindset. When your risk is too high, you become emotionally reactive. You panic when the market moves against you. You make bad decisions out of desperation. Successful traders think in probabilities. They risk small, calculated amounts per trade, not because they're afraid to win, but because they want to stay in the game long enough to win big. Reason number 5, lack of discipline. Let's be real. Most people don't have a trading problem. They have a self-control problem. They know their rules. They know what not to do. But in the moment, they do it anyway. They take impulsive trades. They ignore stop losses. They overtrade to make it back. Why? Because discipline is hard, especially in a high-pressure, emotionally charged environment, like the market. But here's what separates pros from amateurs. Pros trade their plan. Amateurs trade their emotions. Discipline is the invisible thread that holds your strategy together. Without it, everything unravels, no matter how good your system is. Reason number 6, trading for the wrong reasons. Here's a question to ask yourself. Why are you trading? If your answer is to get rich quick, to quit my job tomorrow, to beat the market, then you're already walking into failure. Most people fail because they come to trading with desperation, not dedication. They see trading as a quick fix, not a long-term skill. They want shortcuts, not mastery. And the market punishes that mindset with brutal precision. Successful traders treat trading like a business. They understand it takes time, practice, and patience to become consistently profitable. They're not in it for a dopamine hit. They're in it for freedom and excellence. Reason number 7, no self-reflection or feedback loop. Imagine trying to improve your tennis game, but never watching footage, never reviewing your shots, never getting coaching. That's how most traders operate. They keep trading, but never review their trades. They never journal. They don't track performance. They make the same mistakes again and again. Success in trading demands radical self-awareness. What are your most common mistakes? What time of day do you trade best? Do you risk more after a win or after a loss? Without this feedback loop, you're blind. You can't grow what you don't measure. Journaling your trades, reviewing your performance, reflecting on your mindset isn't optional. It's essential. Final thoughts? Failing isn't the end. Quitting island. Let's get one thing clear. Failure is part of the process. Every successful trader has failed many times. They blown accounts, made impulsive trades, let emotions win. But what makes them different? They didn't quit. Cleaned the market. They looked inward, learned, and leveled up. That's the mindset you need. Failure isn't the opposite of success. It's part of the journey. But repeating the same failures without growth? That's what destroys dreams. You now know the traps. The question is, will you avoid them or fall into them? The choice is yours. Your mindset mission for this chapter. Identify your top 3 trading mistakes. Be brutally honest. Write down a personal trading mission, not based on money, but on mastery. Commit to one change. Whether it's journaling, better risk control, or pausing before every trade. Start with one. Remember, the market is not your enemy. It's just a mirror, reflecting your discipline, your habits, and your beliefs. Master yourself. Master yourself, and the profits will follow. Chapter 3. Mastering emotional discipline. Emotions are not the enemy. They're part of being human. But in trading, unchecked emotions can cost you everything. They whisper in your ear, just one more trade, ... You're missing out. And if you listen, if you act on impulse, the market will teach you a painful lesson. The greatest traders aren't emotionless. They feel fear, greed, doubt, just like everyone else. The difference? They don't let emotions control their decisions. They mastered emotional discipline. In this chapter, we'll explore how you can do the same, how you can become the calm, focused, and strategic trader the market respects. What is emotional discipline? Let's define it clearly. Emotional discipline is your ability to observe your emotions without being ruled by them. It means you recognize fear, but don't panic sell. You feel greed, but don't overtrade. You notice frustration, but don't. Seek revenge trades. It's self-mastery in the moment. It's the strength to stick to your plan, even when your emotions scream otherwise, and it's the ultimate edge in the market. Why emotional reactions destroy traders' let's walk? Through some common emotional traps and how they ruin trades. 1. Fear of missing out. FOMO, you see a candle shooting up, you didn't plan for it, you didn't analyze it, but everyone's talking about it. So you jump in late, and then the market reverses. You bought the top.FOHO, turned smart traders into chasers. It convinces you that missing one opportunity means missing the opportunity. But here's the truth. There will always be another trade. It's only one you. 2. Fear of losing you. Hesitate to enter the trade you've planned. Or worse, you exit early, afraid it might turn against you. You abandon your system to protect yourself from pain. But that fear costs you more than money. It costs you trust in yourself. 3. Greed jar up 20%. It's a great trade. But instead of locking in profits according to your plan, you think, what if it goes higher? So you hold, and it reverses. You went from green to red because of greed. Greed doesn't just push you to overtrade. It blinds you to risk point 4. Anger and revenge trading, you'll lose a trade, and you're furious. You want payback. So you enter another trade, not because it's a good setup, but because you're angry. You over-leverage. You ignore your stop loss. Now you're not trading. You're fighting the market. and the market always wins that fight. Awareness. Your first weapon, the first step to emotional discipline, isn't control. It's awareness. You can't manage what you don't see, so begin observing your emotional patterns. Ask yourself, what emotions do I feel before entering a trade? Or fear of being wrong? You're not judging these emotions. You're studying them. Because once you recognize your emotional triggers, you can prepare for them. Tools to build emotional discipline. Let's now explore concrete techniques too. Help you master your emotions in trading. 1. Pre-trade rituals before a soldier enters battle. They prepare mentally. As a trader, you must do the same. Create a pre-trade checklist. Am I calm? Do I have a valid setup? Is my risk clearly defined? Am I trading the plan or chasing emotion? This simple habit can reduce impulsive decisions dramatically. 2. The 10-second rule. When you feel an emotional urge to chase or to revenge trade, to ignore your stop loss, pause for 10 seconds. Breathe. Ask yourself, is this decision part of my plan? Or is it driven by emotion? This short pause can save you from long regret. Point 3. Daily trade journal your very day. Write down what trades you took, what you were feeling before, during, and after, what worked, and what didn't. This creates a pattern map. It helps you see what emotional states lead to bad decisions and which ones lead to consistent performance over time. If you're risking too much, your emotions will always be high. Reduce your position size. Make every trade boring, not thrilling. The less you fear losing, the more rational your decision-making becomes. Professional traders say it all the time. Trade small enough that the outcome doesn't affect your emotions. 5. Visualization and mental rehearsal before you start trading. Close your eyes and visualize a trade going against you as you calmly accepting the loss. A trade hitting your target and you following your plan, not getting greedy. You executing your rules with clarity and discipline. Visualization trains your nervous system to stay calm under pressure. It builds mental muscle memory, so when stress shows up, you don't flinch. The power of emotional neutrality. Top traders, T, often talk about emotional neutrality. This doesn't mean being numb or unfeeling. It means trading from a place of non-attachment. You don't celebrate wildly after a win. You don't spiral after a loss. You stay grounded regardless of outcome, because in the long run, it's not about any single trade. It's about executing consistently over hundreds, even thousands of trades. The best traders don't chase excitement. They chase consistency. Reprogramming your trading beliefs, stay powerful. Part of mastering emotional discipline is shifting your internal beliefs about trading. I have to win this trade. This trade is just one of many. I follow my process. Losing means I'm a bad trader. Losses are part of trading. I learn from each one. I can't miss this move. If I miss this trade, another opportunity will come. By rewiring these beliefs, begin trading from a place of power, not pressure. Final thoughts. Your emotions don't control you unless you let them let. Let's end this chapter with a truth worth repeating. Your emotions are real, but they are not in charge. You are. You get to choose how you respond. You get to pause. You get to breathe. The wise trader navigates emotion with awareness, tools, and clarity. And as you master emotional discipline, you'll find something powerful. You don't just become a better trader. You become a calmer person, a wiser thinker, more grounded decision maker, both in the markets and in life. That is emotional mastery. And it begins with your next breath. Chapter 4, fear, greed, and ego, the three enemies when most people think about trading. They picture charts, patterns, indicators, and market news. But seasoned traders know the truth. The real battle doesn't happen on the screen. It happens within. You three powerful inner forces: fear, greed, and ego. These are the three enemies that silently sabotage your trades. distort your logic, and blind your judgment. If you want to win in the market, you must first confront these enemies, understand them, and rise above them. Because no amount of technical skill can save a trader ruled by emotion. Let's explore each enemy, one by one. Enemy number one, fear. The silent saboteur. Fear is the voice of hesitation. It whispers, what if this trade fails? You've lost enough already. Better sit this one out. It's too risky. Fear isn't always loud. It's often subtle. It shows up as second guessing, as hesitation, as inaction. You plan your setup. The chart looks good. The entry point is there, but you freeze, you delay, you let the trade pass. And worse, when you finally do trade, you might exit too early just to avoid potential pain, leaving profit on the table. This is fear of losing. And it has a twin. Fear of being wrong. Many traders fear being wrong because they attach themselves to being right. But remember this truth. Trading isn't about being right. It's about being profitable over time. You could be wrong on half of your trades and still come out ahead. Your risk management and mindset are sharp. How to overcome fear. Accept that losses are part of trading. They are feedback, not failure. Trade small enough that losing doesn't feel traumatic. Journal your fearful decisions. Notice patterns. Bring fear into the light. Repeat this mantra. I trade my edge, not my emotions. Enemy number two, greed. The master of illusion of fear makes you freeze. Greed makes you chase. It's the thrill seeker inside you, always hungry for more. It says things like, this trade's going well. Let's add more. Just a little more profit, then I'll exit. I don't need a stop loss. I'm sure it'll go my way. Greed clouds your vision. It convinces you that the rules no longer apply because this time is different. It lures you into overtrading, over-leveraging, and overconfidence. One profitable trade becomes 3 reckless trades. One win creates the illusion that you figured it all out. But the market humbles the greedy, fast, and without mercy. How to overcome greed. Define your exit targets before you enter a trade and stick to them. Treat trading like a business, not a casino. Celebrate process over profits. Ask yourself, did I follow my system? Not just did I make money. Remember, greed feeds short-term wins, but kills long-term success. Enemy number 3, ego. The most dangerous of all fear can be managed. Greed can be tamed, but ego hides. In plain sight, ego tells you, I know better than the market. This system doesn't apply to me. I can make back that loss. I always do. Ego wants to be right more than it wants to be rich. And that's why it's the most dangerous enemy. The ego trader refuses to take small losses. Hey, hold on to losing trades, hoping they'll turn around because they don't want to admit they were wrong. They overtrade to prove their skill. They ignore their plan because they feel like they know what's next. In truth, ego blinds you to reality. It pushes you into battles you don't need to fight. And in the market, pride comes before the fall. How to overcome ego? Accept that you will never control the market, only your reactions to it. View every trade as data, not a verdict on your intelligence. Stay humble, no matter how successful you become. Use this affirmation. I am a student of the market, always learning, never above the rules. Power of self-mastery lets pause and reflect. Each of these enemies, fear, greed, and ego, comes from a natural human place. Fear comes from survival instinct. Greed comes from desire for gain. Ego comes from our need for identity. They're not evil. They're not abnormal. But when you give them the wheel, your trading career veers off track. Mastering your trading mindset doesn't mean you'll never feel fear, greed, or ego again. It means you become aware of them. You acknowledge them, but don't obey them. You learn to respond with discipline instead of react with emotion. That's self-mastery. That's what separates winners from gamblers. Winning wisdom from legendary traders even, the greats have fought these battles. Just listen to their wisdom. The goal of a successful trader is to make the best trades. Money is secondary. Alexander Elder, if you don't learn to take the small losses, sooner or later you will take the mother of all losses. Ed Sakota, the market is designed to fool most of the people most of the time. Jesse Livermore, these traders didn't just beat the market. They beat themselves, their inner noise, their emotional impulses, their need to be right. That's your path too, your mindset on it. Practical takeaways. Before we close this chapter, let's build your emotional defense kit. When you feel fear, breathe. Reduce position size. Focus on execution, not perfection. When you feel greed, exit when your plan says to. Walk away in green, not in regret. When you feel ego, remind yourself you're not in control of the market, only your response to it. You're not here to be the smartest. You're here to be the most consistent. Final thoughts? Your greatest enemy lives inside the market is not your enemy. The traders are not your enemy. You are your own greatest enemy and your most powerful ally. Every time you feel tempted to react emotionally, ask yourself, who is making this decision? The trader in me or the ego in me? The disciplined mind or the fearful one? Buy. Because in the end, it's not about having no enemies. It's about becoming so strong, so self-aware, so grounded that they can't control you anymore. This is the real work. This is the winning edge. It begins inside you. Chapter 5. Developing an unshakable trading routine. Consistency creates confidence, and confidence creates success. In the world of trading, routines aren't boring, they're powerful. They are an anchor in a sea of chaos. The ritual that transforms random actions into a professional process. Every master trader has a routine, not because they're obsessed with control, but because they understand something most beginners don't. You cannot control the market. We'll help you develop a trading routine so solid, so steady, so unshakable, that even on your worst days, it keeps you grounded. Why routine matters more than strategy. It's easy to get obsessed with finding the perfect strategy. But even the best system in the world will fail in the hands of an undisciplined, scattered trader. Here's the truth. Routine beats randomness. Structure creates success. The goal is not to trade more. It's to trade right with clarity, focus, and repeatable actions. And that begins with a routine. The 3 pillars of a strong trading routine. Let's break it down. A winning trading routine consists of 3 key parts. K, pre-market rituals, live trading process, post-market reflection. Each part has a purpose. Each part prepares your mind, your plan, and your performance. 1, pre-market rituals. Prepare. Like a pro before the charts, before the noise. Well, the first trade there is you. Your state of mind determines everything. The best traders treat pre-market prep like athletes treat warm-ups. They don't skip it. They don't wing it. They sharpen their edge. Here's what to include in your pre-market routine. Mental calibration. Start with the 5-minute mindset check. Calm, rested, and focused. Or anxious, distracted, and emotionally off balance. Do not trade if you're emotionally unstable, because in that state, you're not trading, you're gambling. Take a deep breath. Repeat a mantra like, I follow my plan. I stay calm. I trust the process. Market scan and macro awareness now. Review the bigger picture. What economic reports are scheduled today? Are there earnings, news releases, or major events? What is the overall market sentiment? Bullish, bearish, or neutral? You don't need to predict. This awareness allows you to trade with context, not in a vacuum. This creates accountability. It removes guesswork. You now have a battle plan, not just a bunch of hope. 2, live trading process. Execute with precision once, the market opens, emotions rise, distractions multiply, doubts creep in. This is where most traders fall apart, not because they lack skill, but because they lack structure. Open with observation to jump into trades in the first few minutes. Observe, let the market settle. Watch how your watch list stocks behave. Follow it with military discipline. If the setup appears, execute without hesitation. If it doesn't appear, do nothing. Remember, not trading is also trading. Waiting is a skill, not a weakness. Honor your risk management. Move your stop loss emotionally. Never size up just because you feel confident. Never chase a missed move. Stick to your rules, not your feelings. The market may test your patience, but your routine protects your capital. 3. Post-market reflection. Learn, improve, repeat. Your growth isn't found in the trades you took. It's found in how you review them. After the market closes, it's time for reflection. Journal every trade. Log the setup and logic entry. Exit. Stop loss emotional state before, during, after what you did well. What you can improve this is your mirror. It reveals your patterns, strengths, and weaknesses. Be honest. Be detailed. You're not judging yourself. You're sharpening your edge. Over time, you'll start to see what setups work best for you, what times a day you trade better, what emotions cause you to deviate. This insight is pure gold. It turns chaos into clarity, and it makes your growth measurable. Bonus, the power of consistency. You want to trade like a professional? You must think and act like one. That means showing up the same way every single day. Not just when you feel like it. Not just when the market looks easy, but daily, with intention, with structure, with clarity. Your routine becomes your foundation. It protects you from your unshakable routine checklist. Here's a quick summary. Checklist you can use daily. Pre-market mindset check review. Market news, events, update your watch list and trade plan during market. Observe first. Don't jump in to execute only valid setups. Honor stop losses and targets. Stay calm. Stay present post-market. Journal all trades, score discipline and decisions. Review patterns and key takeaways. Stick to this consistently, and you will reduce emotional trades, boost decision-making, clarity, growing confidence, and results. Chapter 6. Confidence. Without arrogance in trading, confidence is your greatest ally. With arrogance is your silent assassin. At first glance, the two can look alike. They both speak with certainty. They both act with boldness. But the difference is everything. Confidence is rooted in discipline. Arrogance is rooted in ego. Confidence says, I trust my process. Arrogance says, I can't lose. One grows from experience and self-awareness. The other feeds on illusions of superiority. In this chapter, we'll learn how to build true, unshakable confidence, the kind that leads to consistent profits while avoiding the deadly trap of arrogance. What true confidence really is. Clear up a common misconception. Confidence is not about being right all the time. It's about being steady when you're wrong, still showing up. Confidence is not based on a lucky winning streak. It's based on knowing your edge, trusting your rules, and accepting outcomes with grace. True confidence is calm under pressure, unmoved by market noise, resilient in losses, humble in wins. It doesn't need to shout. It doesn't need to prove anything. It simply shows up day after day, ready to do the work. The roots of confidence in trading side. Where does this deep confidence come from? Not from guessing, not from bravado, but from 5 specific foundations. 1. Preparation. The more prepared you are, the more certain you feel. Confidence begins long before the trade is placed, during backtesting, journaling, planning, and mindset work. Ask yourself, have I tested my system? Do I know my risk parameters? Have I trained for uncertainty? The more boxes you check before the trade, the more secure you feel during it. 2. Clarity in your process. You can't feel confident in chaos. Confidence requires clarity. That means clear rules for entry and exit, a consistent routine, a well-defined edge. Clarity breeds confidence. Confusion breeds hesitation. 3. Emotional mastery. Confident traders don't ignore emotions. They understand and navigate them. They feel fear, but don't act on it. They feel the temptation of greed, but choose discipline. They feel the sting of loss, but stay composed. Confidence is born when you consistently choose logic over impulse. 4. Accountability. You can't build confidence if you're always blaming the market, the news, or bad luck. Own every decision. Review your trades honestly. Take responsibility for your wins and your mistakes. That's where true power lives. 5. Resilience through repetition. Confidence is a muscle. You build it by showing up daily, taking trades based on your plan, learning from every experience. The more you honor your process, the more you trust yourself. The more you trust yourself, the more confident you become. The danger zone. When confidence becomes arrogance, here's the tricky part. After a few big wins, easy to confuse confidence with invincibility. Arrogance begins with thoughts like, I don't need a stop loss this time. I'm on fire. I'm just double my size. I've mastered the market. I see things others don't. This mindset is seductive. It feels good till it doesn't. Arrogance leads to overtrading, ignoring rules, chasing losses, blaming others. It blinds you to risk. It disconnects you from the truth. And it always ends in painful lessons. The moment you think the market owes you something is the moment you begin to lose. Humility, the secret ingredient of the most consistently successful traders, are confident, humble. They know they can't predict the market. They will take losses. Their edge only works over time. They don't seek to be right. They seek to be disciplined. Humility says, let the chart show me. Let my plan guide me. Let the market teach me. Splendid confidence. What humility creates, a trader who is powerful yet grounded, focused yet flexible. Confidence mindset affirmations. Use these affirmations to reinforce healthy trading confidence. I trust my edge, not my emotions. I trade based on data, not drama. I am always learning. The market is my teacher. I can lose and still be a great trader. My goal is consistency, not perfection. Repeat these often, especially on tough days. They will anchor you when you feel shaken. Recenter quickly. Even the most confident traders have off days. Confidence doesn't mean you never fall. It means you know how to get back up. If you feel shaken, step away from the screen, breathe. Deeply revisit your journal, review your winning trades, read something that calms your mind. Remember, confidence is not a fixed state. It's something you renew daily through your habits. Final takeaways: confidence is earned, not assumed. Let's be very clear. You can't fake true confidence. You earn it through structure, discipline, and practice. Confidence isn't about bold statements. It's about quiet consistency. It's not about being fearless. It's about acting in spite of fear. It's not about ignoring losses. It's about learning from every one of them. And most of all, confidence isn't loud. Arrogance is. Confidence listens. Arrogance talks. Confidence grows. Arrogance collapses. So be bold in your belief, but be humble in your execution. Because when you master the dance between certainty and humility, you become unstoppable. Chapter 7. Risk Tolerance. Know Thyself from your audiobook. Master your trading mindset. Think like a market winner. Introduction. Your risk. Your rules. Every trader wants to win. But not every trader knows what they're willing to lose. That's the difference between a gambler and a professional. In the market, risk is inevitable. But how you handle risk, that's a mindset, a philosophy, a personal truth. This chapter isn't about calculating numbers on a spreadsheet. It's about understanding yourself at the deepest level. Because until you know your risk tolerance, you'll never trade with true peace of mind. Risk doesn't just test your strategy, it tests your soul. Let's explore how to define, understand, and manage your unique relationship with risk, so that you can trade with clarity, confidence, and control. What is risk tolerance? Risk tolerance is the level of uncertainty or potential loss you're emotionally and financially willing to endure. It's not just about how much money you can lose. It's about how much pressure your mindset can handle. Two traders might risk the same dollar amount, but one sleeps peacefully at night and the other spirals into stress. Why? Because risk tolerance isn't about the charts. It's about the person behind the screen. The psychology behind risk triggers something ancient in us. It pokes at fear. It activates survival instincts. Some traders freeze at the thought of a small loss. Others chase risk recklessly, needing adrenaline to feel alive. Both extremes are dangerous. True trading success lies in the middle, gives understanding. Your limits gives respect to them, gives growing them slowly over time. This self-awareness is not a weakness. It's your shield. Why you must know thyself before you pick a trading style, strategy, or position size. You must ask, what level of risk feels manageable to me? How do I respond to drawdowns? Do I act emotionally under pressure? Because if your strategy doesn't align with your personality, doesn't matter how profitable it is, you'll self-sabotage. Think about it. A swing trader with low patience will panic and close trades too soon. A scalper who can't handle fast decisions will freeze or overthink. A long-term investor with a short-term mindset will obsess over every tick. This is why you must tailor your approach to your tolerance, not the other way around. How to measure your risk tolerance? Let's break it down into simple components. 1. Emotional capacity. Yourself. How do I react to losses? Can I stick to my plan after 3 red trades? Do I feel anxious holding overnight positions? Write these reactions down. Be brutally honest. This is the foundation of your trading personality. 2. Financial capacity. This is the practical side. How much money can you afford to lose without affecting your life? What percentage of your capital are you comfortable risking per trade? Do you rely on this money to pay bills? If losing a trade makes you fearful of the future, you're over-risking. Remember, if the risk feels like survival, it's too big. 3. Time horizon and lifestyle shapes your tolerance. Do you have a day job? Do you have dependents? Are you trading full-time or part-time? These answers will influence your approach. There's no shame in being conservative only and pretending not to be. Just in your strategy to fit you now that you've identified your emotional and financial bandwidth. It's time to align your trading style. Scalper gives requires high mental speed and tolerance for rapid losses. Wins gives low risk per trade. But high frequency gives best for fast thinkers who thrive on movement. Day trader requires high focus and precision. Tolerates daily fluctuations. Great for structured minds with time to monitor markets. Swing trader holds positions for days or weeks. Needs tolerance for short-term volatility. Suits patient traders who trust their analysis. Long-term investor holds. Months, years needs high conviction and mental distance from daily noise. Ideal for those with strong fundamentals and calm temperament. Sure risk tolerance will dictate which path feels sustainable, not just profitable. The goal is longevity, not adrenaline. What happens when you ignore your limits? When traders take on risk beyond their tolerance, they spiral. Sleepless nights, revenge trading, jumping between strategies, emotional meltdowns. Eventually, they either burn out or blow up. Why? Because their mind can't handle the stress their trades are creating. No strategy can survive when the trader behind it is emotionally overwhelmed. You don't rise to your goals. You fall to your level of self-awareness. How to expand your risk tolerance safely. You're not stuck. Risk tolerance isn't fixed, it's trainable. Here's how to gradually expand your risk comfort zone. 1. Start small. Master the feeling risk, a small amount, so small it doesn't scare you. Then observe how it feels. Can you stay calm? Can you execute without hesitation? Once you master that level, slowly increase, step by step, dollar by dollar. This is how confidence builds without trauma. 2. Desensitize through simulation use demo. Training to rehearse your setups and practice emotional control. It's not just about practicing entries. It's about practicing reactions. Eventually, the sensations of risk become manageable, not paralyzing. 3. Journal your emotions, not just results track. What trade triggered fear? When did you hesitate or overtrade? How did your risk size affect your psychology? Patterns will emerge, and patterns reveal what needs to change. 4. Create a risk ritual before placing a trade. Ask, am I okay losing this amount? Would I feel the need to change my lifestyle if this went wrong? Does this trade fit my overall risk? Profile. Only proceed if the answer is a calm yes. If you feel tension or doubt, pause. You're not paid to be brave. You're paid to be balanced. Final thoughts. Respecting risk is respecting yourself, knowing your risk. Tolerance isn't just smart tits self-care. It's the difference between a trader who lasts 3 weeks and one who lasts 30 years. It's the invisible line between emotional chaos and mental clarity. When you know your limits, you trade with calm. You act with conviction. Most importantly, to protect your peace. So don't copy someone else's. Risk. Don't pretend to be a high roller when your heart says slow down. You're not weak for being cautious. You're wise for knowing your boundaries. Because in the market, knowing thyself is the ultimate edge. Chapter 8. Patience, Precision, and Psychological Capital from your audiobook. Master your trading mindset. Think like a market winner introduction. The invisible currency of trading in the fast-paced world of markets. Everyone talks about money, strategies, and technical analysis. But there's a far more valuable currency, one you carry inside your mind. That currency is psychological capital. It's the combination of your patience, precision, and mental strength. Without these, even the best setups could fail. Because trading isn't just about making the right moves. It's about waiting for the right moments, making those moves with laser focus, and maintaining mental resilience throughout the journey. In this chapter, we'll unlock how patience, precision, and psychological capital work together to transform you into a true market winner. The power of patience. The trader's superpower, patience, is the hardest skill to master in trading. It's waiting for setups that meet your criteria. It's resisting the urge to chase the market. It's holding your ground when everyone else panics. Here's the truth. The market doesn't owe you a trade. The best trades come to those who wait. Impatience leads to entering to early exiting, too late overtrading, emotional exhaustion. Patience means trusting your plan enough to sit on your hands until the market aligns perfectly. Precision, trading like a surgeon. Patience gets you to the right opportunity. But precision makes the difference between success and failure. Precision means entering exactly where your analysis says to enter, setting stops and targets based on your edge. Not guesswork, following your rules, strictly managing risk, meticulously. It's trading with discipline, not hope. Precision requires clear criteria for every trade, consistent execution, attention to detail. Small deviation can turn a winning trade into a losing one. Master precision, and you minimize mistakes. Psychological capital. Your mental bank account. Psychological capital is a term borrowed from psychology, meaning your mental resources, your confidence, resilience, optimism, and focus. Think of it as your mental bank account. Each trade costs some psychological energy. Good trades add to it. Losses withdraw from it. If you run low, your decision-making suffers. How to build psychological capital. Confidence through preparation. confidence isn't random. It comes from doing your homework, testing, journaling, refining your system. All these deposits build your mental bank. Too. Resilience through experienced losses are inevitable. Resilience is your ability to bounce back without losing your cool. Remember, it's not about avoiding storms, it's about learning to dance in the rain. 3. Optimism. Without naivety, optimism fuels persistence. But it must be realistic. Optimism says, I can learn from this, not I will never lose. 4. Focus amid distractions. Markets never sleep, but your mind can't be on 24/7. Guard your attention like a hawk. How? Patience, precision, and psychological capital work together. Patience ensures you wait for the right trade. Precision ensures you execute the trade perfectly. Psychological capital ensures you stay mentally strong regardless of outcome. They form a powerful trio that turns good traders into great traders. Practical tips to cultivate these traits. Practice mindful trading pause before every trade. Is this trade meeting my criteria? Am I acting out of patience or fear? Great checklist. Soon maintain precision. Know exactly when and how to enter, manage, and exit trades. Develop a pre-trade ritual count. Your mind before each trade. Breathe deeply. Visualize success and challenges. Keep a psychological journal track, not just your trades, but your feelings. Note moments of impatience or doubt and learn from them. Common pitfalls and how to avoid them. Chasing the market. Impatience disguised as action. Overconfidence. Precision turns to recklessness. Mental fatigue. Ignoring psychological capital leads to burnout. Final thoughts. Your mind is your greatest asset. You can learn all the strategies in the world, but if your mind isn't ready, you won't succeed. Patience, precision, and psychological capital are the invisible powers behind every winning trader. Master these. You don't just trade, you win the inner game. Chapter 9. Handling losses like a winner from your audiobook. Master your trading. Mindset. Think like a market winner introduction. Losses are not the end. They're part of the journey every trader, no matter how experienced, will face losses. It's a universal truth. Losses are inevitable. But what separates winners from losers is how they handle those losses. Imagine two traders both lose, $1,000 on the trade. One spirals into despair, revenge trading, and eventually blowing their account. The other accepts the loss calmly, learns, and moves forward strongly. Which trader do you want to be? In this chapter, we dive deep into the mindset and practical strategies that allow you to handle losses with grace, mercy, wisdom, and resilience sturdy. Setbacks into stepping stones for success. Why losses hurt so much? Losses hurt because trading is personal. It feels like losing a battle, a reflection of your skill, your judgment, even your identity. This emotional pain triggers frustration, fear, anger, doubt. These feelings can cloud your judgment and cause impulsive decisions. It's exactly what the market wants. Reframing losses from enemy to teacher them. First step is to reframe your thinking about losses rather than seeing losses as failure. See them as feedback on your strategy, information about the market's behavior, a learning opportunity to improve successful. Traders don't avoid losses. They embrace them as part of the process. The math behind losses and profits understanding. The numbers can help ease emotional pain. If your average win is greater than your average loss, you can still be profitable, even with a losing streak. Example, average win, $200. Average loss, $100. Win rate, 40%. Even if you lose 6 out of 10 trades, you're still ahead. Knowing this helps you accept losses without panic. Key strategies to handle losses like a winner. Stick to your risk management rules. Never risk more than you can afford. Setting a strict risk per trade, for example, 1 to 2% of your account ensures no single loss can devastate you. 2. Use a trading journal. Record every loss. Write down why the trade was taken, what went wrong, how you felt during and after the losses. helps you spot patterns and avoid repeating mistakes. 3. Avoid revenge trading losses. Trigger an urge to get even fast. This is a dangerous trap. When you feel the impulse, take a break, walk away, clear your mind. Remember, revenge trading is trading your emotions, not your strategy. 4. Practice mindfulness and emotional control. Learn to observe your feelings without acting on them immediately. Deep breathing, meditation, or a short walk can help calm the mind after a loss. 5. Set realistic expectations. No trader wins 100% of the time, except that losses are part of the game. This reduces frustration and disappointment. The recovery process. Bouncing back stronger. Step 1. Acknowledge the loss and deny it or ignore it. Face it head on with honesty. Step 2. Analyze objectively. Look for lessons, not blame. What went wrong? Was it the setup, execution, or market conditions? Step 3. Adjust if necessary. Refine your strategy based on your analysis. Small tweaks can make big differences. Step 4. Take a break if needed. If emotions are still raw, step away from the screen. Rest your mind before trading again. Real-life examples of traders handling losses. Legendary investor Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." His patience through losses made him a multi-billionaire. Paul Tudor Jones, a famous hedge fund manager, emphasizes that losing is part of trading. Losers average losers. His discipline helps him avoid emotional traps. Mindset shifts to embrace losses do not define you. Every loss brings you closer to mastery. Your goal is consistency over time, not perfection every day. Control your response, not the outcome. Chapter 10. The Power of Journaling and Self-Review. From your audiobook, Master Your Trading Mindset. Think like a market winner introduction. Your best trading coaches, you in the pursuit of market mastery. There's one tool, more powerful than any indicator or algorithm. Your own journal. Journaling isn't just about writing down trades. It's a strategic practice that transforms raw experience into wisdom. It's your personalized feedback loop, your inner coach. Your path to self-awareness. In this chapter, you'll discover how journaling and honest self-review can sharpen your edge, deepen your discipline, and build a mindset that thrives in continuous growth. Why journaling matters in trading can be a chaotic ride. Markets move fast, emotions flare, and decisions pile up without reflection. Mistakes repeat, emotions go unchecked, progress stalls. Journaling brings structure to chaos. It helps you track your trades and outcomes, capture your thoughts and emotions, identify patterns in behavior and decision-making, develop clarity and objectivity. What to record in your trading journal. Your journal should be more than a dry log. 1. Trade details, entry, exit points, position size, stop loss, and take profit levels. Reason for taking the trades. Strategy 2. Market conditions, overall market trend volatility. News, events. 3. Emotion. State how you felt before, during, and after the trade. Any distractions or doubts for mistakes and lessons learned. What went right? What went wrong? What can be improved? The psychology of self-review in this. Self-review requires courage. It means confronting your mistakes without judgment or excuses. It means celebrating small wins without arrogance. How to make self-review effective. Set a routine. Review your journal daily or weekly. Be specific. Look for recurring mistakes or emotional triggers. Ask questions. Why did I enter this trade? Was I patient? Did I follow my plan? Track progress, celebrate improvements, and adjust when needed. How journaling builds discipline and confidence. Discipline. Writing down your plans and results creates accountability. It's harder to deviate from your strategy. When you know, you'll have to explain it later. Confidence in your progress over time boosts self-belief. When you track your wins and how you recover from losses, your confidence grows organically. Journaling tips for maximum impact: use simple tools, a notebook, spreadsheet, or trading journal apps. Keep entries concise but insightful. Include charts or screenshots if possible. Review with a growth mindset. Mistakes are data, not disasters. Share insights with a mentor or community to get perspective. Common journaling pitfalls and how to avoid them: inconsistency. Make journaling a habit, not an afterthought. Superficial entries. Dig deeper than "I lost money." Explore the why and how. Ignoring emotions. Trading isn't just numbers. Our feelings matter. Being overly critical. Be kind, but honest. Self-compassion fuels growth. Journaling. As a mindfulness practice, journaling also trains you to observe your thoughts and emotions objectively, a core mindfulness skill. This habit helps reduce impulsive reactions and builds emotional resilience, making you calmer and clearer in your decisions. Final thoughts. Your journal is your secret weapon. Trading success isn't magic, it's methodical. Journaling turns random experience into reliable learning. It turns emotional trading into thoughtful trading. If you commit to journaling and self-review, you hold the keys to unlocking your full potential as a market winner. The more you know about yourself, the better you trade. Chapter 11. Rewiring limiting beliefs about money and markets from your audiobook. Master your trading mindset. Think like a market winner introduction. The invisible chains that hold traders back. Your mind is a battlefield. And sometimes the greatest enemy isn't the market. Teach your own limiting beliefs about money and trading. These beliefs are deep-rooted ideas you may not even be fully aware of, but they quietly shape how you approach risk, opportunity, and success. Imagine trying to drive a car with the handbrake partially on. No matter how much you press the accelerator, you won't reach your potential speed. Limiting beliefs act like that handbrake. They slow you down, block your progress, and keep you stuck. In this chapter, we'll uncover how to identify, challenge, and rewire those beliefs so you can trade with freedom and confidence. What are limiting beliefs? Limiting beliefs are subconscious rules or stories you tell yourself, such as, "I'm not good enough to succeed in trading." "The market is rigged against me." "Making money from trading is too risky." "I don't deserve financial success. I'm just unlucky." These beliefs often originate from childhood, culture, past failures, or in hearing negative stories about money. How limiting beliefs impact your trading. When you hold limiting beliefs, you might doubt your decisions and hesitate to act. Avoid taking calculated risks. Sabotage your own success with procrastination or fear. Feel overwhelmed or anxious when faced with losses or drawdowns. Miss opportunities because you expect failure. Identifying your limiting beliefs. The first step to change is awareness. Ask yourself honestly, what do I really believe about money and success? What stories do I tell myself when things go wrong? How do I feel when I think about making big trades or risking capital? What fears come up when I imagine financial freedom? Write these down. Seeing them on paper makes them easier to confront. How to rewire limiting beliefs. 1. Challenge the belief. Ask yourself, is this belief 100% true? Where did it come from? Do I have evidence that contradicts it? For example, if you believe the market is rigged, think about successful traders you admire who thrive. 2. Create empowering alternatives. Replace limiting beliefs with positive, realistic affirmations such as, "I am capable of learning and succeeding in trading." Markets offer opportunities every day. Risk is manageable with the right plan. I deserve to create wealth through my efforts. 3. Use visualization. Regularly visualize yourself trading confidently and successfully, feeling calm. In focus, visualization rewires your brain to expect success and reduces fear. 4. Practice affirmations. Write down your new beliefs and repeat them daily, ideally out loud. Consistency is key. Repetition helps. Reprogram your subconscious. 5. Surround yourself with positive influences. Seek out mentors, communities, and resources that reinforce empowering beliefs. Avoid negativity that reinforces fear or doubt. How rewiring beliefs transforms your trading mindset. When you rewire limiting beliefs, you unlock greater confidence in your decisions, willingness to take calculated risks, better emotional control during wins and losses, persistence and resilience in setbacks, openness to learning, and growth real life. Example, from scarcity to abundance. Consider a trader who once believed, "I'm always unlucky." After identifying this belief, they challenged it by reviewing past successes and studying the habits of winning traders. They replaced it with, "Luck is what I create through preparation and discipline." Over time, this shift changed their approach. They took more confident trades and recovered losses faster. Integrating mindset work into daily trading. Make mindset rewiring a daily habit. Spend 5 minutes each morning reviewing your affirmations. Reflect weekly on any old limiting beliefs that surface. Use journaling to track your progress and breakthroughs. Final thoughts. Freedom begins in the mind you are. Beliefs about money and markets shape your reality far more than charts or news. Rewiring those beliefs isn't a one-time task, it's an ongoing journey of growth. Every step forward gives you more freedom, confidence, and power to become the trader you aspire to be. Change your beliefs, change your trading life. Chapter 12, The Peak Performer's Mindset, from your audiobook, Master Your Trading Mindset. Think like a market winner. Introduction. What makes a peak performer? In every field, sports, arts, business, and yes, trading, there's a select group of people who consistently outperform the rest. They are the peak performers. But what separates peak performers from average traders? Is it raw talent, luck, advanced strategies? No, it's their mindset. This chapter reveals the mental habits, attitudes, and beliefs that enable peak performers to excel under pressure, uncertainty, and setbacks. The core traits of a peak performer's mindset. 1. Relentless focus. Peak performers know how to tune out distractions and focus intensely on what matters. In trading, this means focusing on your strategy, not the noise, staying present in the moment, serving price action, objectively avoiding impulsive reactions based on fear or greed. 2. Growth-oriented attitudes. They view every experience win or lose as a chance to learn and improve. Mistakes aren't failures, they're feedback. Peak performers embrace challenges and seek continuous growth. 3. Emotional mastery. They don't let emotions hijack their decisions. Instead, it's recognize feelings like fear, greed, or frustration and manage them skillfully. This emotional balance keeps their trading rational and disciplined. 4. Unwavering discipline. Peak performers follow their trading plan with consistency. They don't chase trades or deviate impulsively. They understand that discipline creates freedom in the markets. 5. Resilience and adaptability. Markets change constantly. Peak performers adapt without losing confidence or control. They bounce back quickly from losses or setbacks, using them as fuel for improvement. To develop the peak performer's mindset. 1. Set clear goals. Confine your trading goals with precision. What do you want to achieve? Why does it matter? How will you measure success? Clear goals provide motivation and direction. 2. Create a ritual for focus. Develop pre-trading routines to enter a state of flow and focus. This might include reviewing your plan, deep breathing, or meditation, removing distractions. 3. Cultivate self-awareness regularly. Check in with your emotions and thoughts. Ask, am I trading out of fear or greed? Am I sticking to my plan? What mental state am I in right now? 4. Build mental toughness practice. Staying calm under pressure through techniques like visualization and controlled exposure to stress. For example, simulate challenging market scenarios in practice to build confidence. 5. Commit to lifelong learning. Read books, watch tutorials, and learn from experienced traders. The best performers never stop improving. Daily habits to embody the peak performers. Mindset, morning reflection, visualize your successful trading day ahead. Journaling, track not just trades, but mindset and emotions. Physical health, maintain energy with good sleep, nutrition, and exercise. Mindfulness practice, stay present and reduce anxiety. Peak performer quote, to remember excellence is not a singular act, but a habit. You are what you repeatedly do. Aristotle final thoughts, the mindset that wins over time, becoming a peak performer, isn't about perfection. It's about showing up every day, cultivating your mindset, and trusting the process. With this mindset, you're not just trading, you're mastering yourself. The market rewards the mind that's prepared, disciplined, and resilient. Chapter 13, Daily Mental Habits of Elite Traders from your audiobook. Master your trading mindset. Think like a market winner introduction. What sets elite traders apart? Elite traders don't just have better strategies or luck. They have daily mental habits that build and sustain their success. These habits aren't flashy or complicated, but they are consistent and powerful. In this chapter, you'll discover the core mental routines elite traders practice every day to keep sharp, focused, and emotionally balanced. Habit 1, morning mindset preparation lead. Traders start their day with intention. They set clear mental goals and prepare themselves emotionally for the trading day ahead. This might include reviewing the market, environment, and their trading plan, visualizing successful trades, and calm decision-making. Practicing mindfulness or deep breathing to center their focus. This preparation helps prevent impulsive reactions and builds confidence. Habit 2, journaling and reflection, as we discussed earlier. Journaling is a powerful habit. Elite traders don't just record their trades, they reflect on their emotions, mindset, and decisions. At day's end, they review what worked, what didn't, and what they can improve. This habit fosters continuous growth and self-awareness. Habit 3, emotional check-ins throughout the trading day. Elite traders pause to monitor their emotional state. They ask themselves questions like, am I feeling anxious or impatient? Is fear or greed influencing my decisions? Am I staying disciplined to my plan? This ongoing self-awareness keeps their emotions in check and prevents costly mistakes. Habit 4, focused execution lead traders approach each trade with full attention. They avoid multitasking, distractions, and second guessing. They follow their rules and trust their preparation. This focus ensures precision and consistency. Habit 5, stress management and recovery trading can be intense and stressful. Elite traders build mental resilience by taking breaks, practicing relaxation techniques, or briefly stepping away from screens when needed. They know that recovery is essential for sustained performance. Habit 6, continuous learning. Top traders dedicate time daily to learning, whether it's reading market news, studying new strategies, or revisiting lessons from past trades. They cultivate curiosity and humility, recognizing that markets evolve, and so must they. Habit 7, end-of-day review and planning before ending their day. Elite traders review their performance objectively. They update their journals, acknowledge emotions felt, and plan for the next day. This habit closes the loop and primes their mind for improvement. Summary: your daily mental habits checklist morning. Mindset preparation, journaling and honest reflection, emotional check-ins during the day, focused. Disciplined execution, stress management and timely breaks, commitment to ongoing learning. End-of-day review and planning final thoughts. Small habits. Big results. Elite trading isn't built on magic. With geniuses built on daily mental habits that sharpen the mind, build resilience, and create consistency. By adopting these habits, you align yourself with the mindset of winners who thrive in markets no matter the conditions. Success is the sum of small efforts repeated day in and day out. Chapter 14, Trading with Presence and Focus from your audiobook. Master your trading. Mindset. Think like a market winner introduction. The power of being presented the fast-paced world of trading. The mind can easily become scatterjumping from one thought to another, distracted by emotions, news, or the noise of the markets. Yet, the most successful traders have mastered one powerful skill: presence. Being present means fully engaging with the current moments, observing the market without judgment, without distraction, and without the clutter of past regrets or future worries. Focus and presence allow you to see the market clearly, react calmly, and make decisions that are thoughtful rather than impulsive. This chapter explores how cultivating presence and focus transforms your trading from reactive chaos into deliberate mastery. What is presence in trading? Presence is a state of mindful awareness. It's the ability to observe market movements without emotional overlay. Notice your thoughts and feelings without being controlled by them. Stay grounded in your trading plan and strategy. Respond to signals and setups calmly and clearly. Presence creates a space between stimulus and responsive space where you can choose your actions consciously. Why presence and focus matter more than ever. Markets today move faster and with more noise than ever before. Social media, instant news, volatile price swings bombard traders every second. Without presence, you may react impulsively to every headline or price spike. Your emotions can hijack your decisions. You might lose sight of your strategy or risk management rules. With presence and focus, you stay calm amidst chaos. You execute your plan with discipline. You see opportunities clearly and act decisively. How to cultivate presence and focus for trading. Start with mindfulness, meditation. Spend a few minutes daily practicing mindfulness. Simply sit quietly and focus on your breath. When your mind wanders, gently bring it back. This practice trains your brain to stay anchored in the present. 2. Create a pre-trading routine before market open or before trading sessions. Review your plan quietly. Take deep, calming breaths. Visualize yourself trading calmly and focused. This primes your mind for presence. 3. Limit distractions. Turn off unnecessary notifications. Mute social media and close unrelated tabs. Create a clean and focused workspace. 4. Use the pause and breathe technique whenever you feel tension, anxiety, or impulsiveness. Pause your actions. Take 3 slow, deep breaths. Refocus on your trading plan in the current market situation. 5. Practice single task and avoid multitasking. Focus on one trade or one market at a time. This sharpens your attention and reduces errors. 6. Observe without judgment when the market moves against you or a trade doesn't go as expected. Simply observe what is happening without labeling it good or bad. This neutral observation reduces emotional reactivity. The impact of presence on decision-making. Presence allows you to detect subtle market cues that others miss. Avoid knee-jerk reactions fueled by fear or greed. Make decisions aligned with your strategy, not your mood. Maintain patience during waiting periods. Recover quickly from losses with clear-headedness. Real-world example, consider a trader faced with sudden market volatility. Instead of panic selling or impulsively entering a trade, the trader pauses, breathes, and assesses calmly. They identify a valid setup aligned with their plan and enter confidently. This presence turns a potentially costly situation into an opportunity. Final thoughts? Presence is your trading superpower in a world full of distractions and emotional turbulence. Presence and focus are the anchors that keep you steady. By cultivating these qualities, you trade not just with your skills or strategy, but with a calm, clear, and winning mindset. Where your attention goes, energy flows. Master your focus. Master your trades. Chapter 15, Mastering the Long Game from your audiobook. Master your trading mindset. Think, like a market winner introduction. Why thinking long-term wins in trading? It's easy to get caught up in short-term wins and losses. A single trade can feel like the difference between success and failure. True mastery isn't about quick wins. It's about playing the long game. Mastering the long game means focusing on sustained growth, resilience, and consistency over months and years, not just days. This mindset transforms trading from a roller coaster of emotions into a steady, rewarding journey. The pitfalls of short-term thinking drives many traders to chase quick profits, often ignoring their plan over trade, risking too much capital on impulsive decisions, panicked after losses, and abandoned. Strategies prematurely become emotionally reactive to every market move. This behavior leads to burnout, losses, and frustration. What does mastering the long game mean? Mastering the long game means having patience to wait for the right setups, trusting your trading strategy through ups and downs, managing risk carefully to protect your capital over time viewing. Losses is part of the learning curve, not the end. Building a mindset focused on progress, not perfection. Key strategies for playing the long game. 1. Set realistic goals. Aim for consistent, reasonable returns rather than chasing outsized gains. For example, a goal of 5% monthly growth is more sustainable than trying to double your account quickly. Point 2. Develop a robust trading plan. Your plan should include clear rules for entry and exit points, position sizing, risk management review, and adjustment processes. Critique to your plan through volatility. 3. Practice risk management. Never risk more than a small percentage of your capital on any single trade. This approach protects you from catastrophic losses, keeps you in the game longer. 4. Keep a trading journal. Document your trades, decisions, and emotions. Review regularly to identify patterns, strengths, and areas for improvement. 5. Stay patient and avoid over-trading risk. The urge to constantly jump in and out of the market. Focus on quality trades that fit your strategy. 6. Embrace losses as learning. Losses are inevitable. Instead of fear or denial, use them as data to refine your approach. Point 7. Maintain emotional balance. Avoid letting short-term results dictate your mood or confidence. Celebrate progress and growth over time. Mindset shifts to support the long game. From I need to win now to I am building a winning habit. From one loss means failure to losses are stepping stones. From trading as a sprint to trading as a marathon. Real life story: the patient trader meet a trader who struggled initially with impatience, chasing quick profits. By shifting focus to the long game, setting small goals, managing risk, journaling, they steadily grew their account and confidence. After a year, they were not just surviving, but thriving. Conclusion: you are the edge. From master your trading mindset. Think like a market winner. Introduction: the ultimate truth of trading after exploring every facet of the trading mindset, from emotional discipline to presence, from managing risk to mastering the long game. One undeniable truth stands out: the greatest edge you can ever have in the market isn't a secret strategy, a fancy indicator, or insider information. It is you, your mindset, your habits, your emotional control, your discipline. These are your true advantages. Why you are the edge. Markets are complex, volatile, and unpredictable. No system or method can guarantee success, but you can control how you think, how you respond, and how you grow. This self-mastery transforms challenges into opportunities and losses into lessons. Your mental resilience and clarity become the sharpest tools in your trading arsenal. The power of self-trust and confidence. Confidence isn't arrogance. It's the quiet inner knowing that you've prepared, learned, and developed the skills to navigate the market's ups and downs. This confidence allows you to stay calm when others panic, make decisions with clarity, not chaos. Stick to your plan even when emotions run high. Trusting yourself is the foundation of consistent success. Growth is your continuous edge. The markets will always evolve. So must you. A trader who commits to lifelong learning, reflection, and adaptation will always have an edge over one who clings to fixed beliefs or rigid habits. Growth mindset. Believing you can improve keeps your edge sharp and relevant. Balance's key success in trading isn't just about winning trades. It's about balancing discipline with flexibility, patience with action, and focus with recovery. You, as the trader, are the dynamic force who adjusts and thrives amidst market chaos. Final affirmation. On your edge, remember this as you move forward. You are not just trading the market, you are trading yourself. Your mindset is the arena where the real battle is won and lost. Master your mind, part of your market, part of thought. Your trading journey awaits them. Journey. You have begun mastering your trading mindset as the most important investment you will ever make. Every day you show up with discipline, presence, and resilience. You sharpen your edge and move closer to your trading goals. Believe in yourself. Trust the process on your edge. Because at the end of the day, you are the difference between a trader who struggles and a trader who wins.